Hey everyone, and welcome. Today, we're going to tackle a topic that is absolutely crucial for any trader who wants to get a real edge, combining multiple chart indicators to build a smarter, more reliable trading strategy.
All right, let's just dive right in, shall we? Let's talk about what I call the indicator dilemma. It's something every single trader runs into when they start slapping technical tools on their charts.
I mean, we've all been there, right? You spot what looks like the perfect setup. Your favorite indicator flashes a big green buy signal. You jump into the trade feeling great, and then, bam, the market does a complete 180 on you. It is so frustrating, and trust me, it happens to everybody.
And that's the whole problem, isn't it? See, in a perfect world, we could just pick one indicator and trust it, no questions asked. But the reality is, every single one of them, I don't care if it's the RSI, a moving average, you name it, they all have flaws. They can all give you bogus signals. Relying on just one, it's kind of like trying to navigate a huge ocean with only one tiny star to guide you.
So what do we do about it? Well, the solution isn't about chasing some mythical perfect indicator. It's about building a team of indicators that actually work together.
This leads us to a really cool concept called indicator screening. I want you to think of it like a hiring committee for your trades. You wouldn't hire a key employee after just one 5-minute interview, would you? Of course not. You'd want multiple opinions. Well, it's the same thing in trading. We use different indicators to screen or interview each other's signals, and we're looking for strong agreement before we make a move.
And the logic behind this, it's so simple, but so powerful. So let's say one indicator whispers, hey, maybe sell. Okay, that's interesting. But what if a second, totally different kind of indicator shouts the exact same thing? Well, all of a sudden, your confidence in that trade just skyrockets because you've filtered out so much of the potential market noise.
Okay, enough theory. Let's make this real with a case study. For our first one, we're going to use a classic combination. Bollinger Bands, which are great for seeing volatility, and the stochastic oscillator, which tells us about momentum. Let's see how these two play together.
Okay, so take a look at the screen. What we've got here is a 4-hour chart of the euro versus the US dollar. You can see those lines wrapping around the price candles. Those are the Bollinger Bands. And that window down below? That's our stochastic indicator. Now, let's watch how they team up to give us a signal.
And this is where the magic happens. Look how two different signals line up perfectly. First, the price action comes up and tags the top Bollinger Band. That often acts as a price ceiling or resistance. So that, by itself, is a potential reason to sell. But we don't jump in just yet, right? For our confirmation, we glance down at the stochastic, and at the exact same time, it's pushed up into the overbought area. That's our confirmation. That's the green light.
And what was the result of that patience? A beautiful drop in price, a potential profit of around 300 pips. And for those new to Forex, pips are just the tiny units of price change. The point is, waiting for that second indicator to agree paid off big time.
Now check this out. A little later on in the same chart, we get the exact opposite scenario. The price comes down and touches the bottom Bollinger Band, which tends to act as a floor or support. We check with our confirmation indicator, and sure enough, the stochastic has dropped deep into the oversold area. This tells us that the selling pressure might just be exhausted. It's a powerful 1-2 punch signaling a potential buy.
In that trade, it could have netted you a cool 400 pips on the way up. See how powerful this is? Not bad at all.
All right, let's switch gears and look at another killer combo. This time, we're pairing up two absolute titans of momentum, the Relative Strength Index, or RSI, and the MACD. Okay, so here's our next setup. We've got the price action up top, just like before, but down below in the indicator windows, we now have the RSI and right underneath it, the MACD. Now these two have a really interesting dynamic. Now what's really cool about these two is how they work together. You can think of the RSI as your early warning system. It's usually the first one to flash a signal. The MACD, on the other hand, is a little bit slower, a little more deliberate. But that's what makes it the perfect confirmation tool. It comes in and validates what the RSI was trying to tell you.
So, here's the game plan. This is how you read them together. For a sell signal, you wait for the RSI to get up into that overbought zone. Then, you look for the MACD lines to cross over to the downside. That's your trigger. And for a buy, same idea, just flipped. You wait for the RSI to drop into oversold territory, and then you wait for that upward MACD crossover for your confirmation.
And when you look back at that chart, what happened? After that confirmed buy signal, the price just started this nice, steady climb. This is exactly the kind of high probability setup that we're looking for. More pips for us, yippee!
Okay, so we've seen a couple of great examples.
But the real takeaway here, the crucial point, isn't just to copy these exact setups. It's about understanding the principle so you can start building your own.
And this, of course, leads everyone to ask the million-dollar question, the one that every new trader wants to know. So what is it? What's the single best, the one magic combination of indicators that's going to give me perfect signals every single time?
And I'm going to give you the answer right now. This is probably the single most important thing you'll hear in this entire explainer. The truth is, it doesn't exist. There is no such thing as the magic combination of indicators.
So what's the real path? It's not about finding a shortcut. It's about you doing the work. First, you have to really study each indicator by itself. Learn its personality, its tendencies, its strengths, and its weaknesses. Then, you just have to watch. Observe how it behaves in relation to the price action. Only then can you start putting them together, building a system that actually makes sense to you and fits your personal trading style.
You see, the goal isn't to find someone else's secret formula. It's about becoming a craftsman and building your own. It's about testing, observing, and creating a system that you understand inside and out, one that you can truly trust. So that just leaves one final question. What combination will you build?